RITES. Flattish growth in terms of revenues. Profits have seen an uptick of around 1.4% as well. The stock trading at the day's lowest levels with cuts of 2.5–3%. Coming in there, Rahul Mithal, Chairman and Managing Director at RITES, joins in. Rahul, good afternoon and welcome to the show. Always a pleasure to speak to you at NDTV Profit. The results are flat. Execution now becomes a key going ahead as well. I mean, the revenue also has been led by consultancy and exports, and the kind of margin rebound that we've seen is again a strong point. From here on, is the year expected to look similar to the first quarter, or do you see further green shoots from here on?
Good afternoon. Yes, the key element which you said is expeditious execution. You see, the order book of 8,800 crores, that's a very young order book. About 3,500 crores out of that, and that is 300 plus orders totaling to about 3,500 crores, came in the last 2 quarters of the last FY. And considering an average lifespan of about 2.5–3 years of an infrastructure project, these orders, we are fully on track to do the initial design work and fixing up the executing agencies, etc. So that by Q3 onwards, when the actual construction starts on the ground level, that's where these revenues, these orders will start generating revenue. So the key point is that, yes, the quarter has been flat and the preparatory groundwork for a majority of the orders is being done so that sequentially you see an improvement, so that overall in an FY, we definitely surpass the performance of last year.
Hi, Varsha, this side, pleasure to have you. So with that, the overall guidance of 20% of top line growth remains on track when it comes to FY26?
Yes, we had at the beginning of the FY given a guidance of a growth of top line of 20%. We are still aspiring for it, plus minus a percent or two here and there, but definitely that is the goal which we have set ourselves for, considering, as I said, the orders which came in at the right time due to a lot of effort last year, and now we are at that stage where these have to start generating execution and generating revenue. In fact, the export orders also, you see the export order book of 1,400 crores. We had said that we will start delivering, the deliveries will start, and the first 2 locomotives have gone in early July, so that revenue will start getting booked in Q2. So this, whether it's the consultancy orders, whether it's the export orders, or whether it's the turnkey orders, the executions are now the key.
So with execution, which is key, your order book was around 8,900 odd crores at the end of the fourth quarter of FY25. How much have you added in the first quarter of FY26, and what's the visibility with regards to execution and revenue realization from these projects?
So we got in the Q1, we got about 150 plus fresh orders totaling to about 400 crores plus 414 crores. These were primarily consultancy orders. So consultancy orders are normally small ticket size orders. We also maintained that track record of 1 export order a quarter, which we started about 5 quarters back. So we got a small export order also of about 30 plus crores to South Africa for 2 locomotives. So in terms of order book, the size on 30th June is approximately the same, about 8,800 crores. But even now in Q2, in the month that has gone by, we've already reached about another 300 crores plus orders. So which is nearly equivalent to the entire, or reaching close to the entire Q1. So in terms of order book, we definitely see touching about 10,000 crores somewhere down the line, maybe latest by end of this FY. And definitely, as I said at the outset, expeditious and focused targeted execution. So you see a sequential growth in the top line in each of these quarters, and an overall growth on an FY to FY basis, at least aiming for a healthy, very healthy double-digit growth.
Right. Rahul, so you're getting more new orders, by being very competitive with other companies, of course. And because of this, do you expect your profit margin or on the your EBITDA margin to stay around 20%, or do you see more pressure when it comes to margins?
You see, I had given a guidance at the beginning of this FY that last year our focus was trying to re-engineer the strategy, whether it is in our competitive bidding or whether it's our costing, etc. And that made us achieve the milestone of being a one order a day. And we've maintained that for last 6 quarters. Now it's more than one, in fact, 1.3 orders a day on an average. So now we have reached the bottom of the barrel, to my mind, in terms of the margins. And at the beginning of the FY, I had given a guidance that we would be aiming for EBITDA margins around 20% odd and PAT margins of about 15%. Quarter one is in that range, in fact, slightly better. But on a blended overall year basis, we are sure that as I said, the bottom of the barrel has been reached, and we would be able to maintain EBITDA margins of about 20% and PAT margins of about 15%.
You had high, outlook in terms of how exports would look like. The previous quarter, I think, if I'm not mistaken, you secured projects worth little over 900 odd crores in the export business. It's actually come down to 31 crores. What's the reason for this kind of a dip? Likewise, turnkey also has seen a degrowth. Lease has also seen a degrowth. What are the factors that is impacting the order inflow, number one, in terms of projects that you're securing? And from here on, the outlook that you have with regards to where RITES Videsh goes?
No, so let me correct you. The order inflow of the figures that you mentioned, 900 crores is now 1400 crores in export tech. That 15 crores or something, that is the revenue. That's the revenue in export. So in terms of export order book, we have continued to add on the export order, one export order every quarter. So now, in fact, it's gone up sequentially every quarter, and now we are at 1400 crores on export, pure export of rolling stock as of 30th June. Besides that, we have a substantial order of about 200 odd crores in project consultancy. So these are the two elements of RITES Videsh, as you said. And this 1400 crores of export of rolling stock, the execution also has started. So out of the 300 crore of this from Mozambique, which is 10 locomotives, the first 2 locomotives have been shipped out in early July, and that revenue will then get booked in quarter 2, because the revenue gets booked when the bill of lading happens. So whether it is the growth in the export order or execution, there's an uptick in both.
Well, thank you, Rahul, for joining this conversation, and pleasure to have you, and all the best for the business.